Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for Women's History Month is Jamie Englebert, principal of Englebert Financial Advisors, to discuss considerations women should factor in when constructing a financial plan. Jamie, it's great to see you again. Welcome to Trade Talks.
Jill, thank you so much for having me. I'm really excited about joining with you to talk about finance and closing in on Women's History Month. It's definitely something that, women are excited about and definitely more prevalent now than probably generations before.
Yeah, that really is exciting. And we're glad that you're able to spend time with us. So Jamie, let's kick it off. Why should women take an interest in personal finance, whether they have a family or not?
Well, I can speak for myself. Older generations used to have the mindset of, marry rich or, make sure you marry a doctor or something like that. A man is not a financial plan. And I think definitely younger generations are, advocating for themselves and definitely being more involved. It doesn't matter if you're on your own, you're divorced, you're a widow, wherever you are at the stage of the game, you've got to be involved and you have to know what's going on. And if you don't educate yourself, there's so many resources out there now. People working, I know in our practice, we really want people to understand, because a lot of times people will say, oh, my husband takes care of that, or, they don't need to know about that now, but a little bit of education goes a long way.
It certainly does. I'm dealing with that with my parents now. Especially for your children that are taking care of adult parents or thinking about that 10, 20 years down the line, it really is important. So with that, Jamie, what are some special considerations for women?
Well, exactly what you're saying. Generations older than us, it was really common for the husband to go off and work while the woman stayed home, took care of the family, took care of the house. And a lot of times the man would take care of the finances. So, as these baby boomer generation really are aging out, husbands will, pass away just, based on statistics, and the woman is left to kind of take care of things. And with that older generation, a lot of times they're just ill-equipped, they're not prepared, which is where we really come into play. And it's really gratifying for us when we sit down with people and meet with clients, whether it's a widow or maybe it's even a couple who comes in and the husband will say, gosh, I'm really hoping when I die that you're going to take care of my wife, because she doesn't, she's not part of the finances. So again, it's all about the education, and we really do a lot of hand holding, to get that woman up to speed, get her, maybe a budget if she's not working with one, or, just kind of a basic understanding of how investments work, because, if you're left to take care of it, you want to be on top of things.
When women are interviewing advisors, what are the appropriate questions to ask?
That's a really good question, and not even just for women, but when you're out there doing your searches, probably the most important thing, I think, is to ask if they're a fiduciary, because a fiduciary is somebody who's looking out for your best interest. This is a little bit different than, some companies who are in it to make money for themselves. That's not the kind of company you want to work for. Look to see if they're a fiduciary. Another thing that I think a lot of times people don't quite understand is how people in our industry get paid. You want to look for somebody who's maybe a fee-based advisor versus being charged a commission. Because what you don't want to do is, especially if you're not familiar with investments, how they work, how things cost structure, you don't want to, walk in and have somebody talk you into, let's say, like a high ticket annuity policy with a big chunk commission for right up front for the advisor who sold it to you, and you had no idea what kind of investment you were getting into. So that's a real important question to ask, is how does the advisor get paid? Are you charging commissions, or is it fee-based? You want to know. And also, when you go to meet with an advisor, be upfront and clear with what your needs are, because they should be tailoring the strategy to you and not the other way around, where they're putting you in some, homogenized mix that makes sense for them and maybe how they're getting paid. So a lot of good questions to ask.
Yeah, those are all great points. Jamie, are you finding younger women investors, millennials, Gen Y, even Gen Z at this point, are they approaching the market differently?
Oh, absolutely. Um, with social media now, everybody has so much information at their fingertips. When I was younger, if I wanted to learn anything about finance, you had to read the Wall Street Journal or Barron's or something like that to kind of educate yourself. But nowadays, everybody has this information at their fingertips. Whether you want to read about it or not, it's right there. It's right there for everybody to see. So definitely, the younger generation, they just know more, even if it's, just talking about the meme stocks or stuff like that, it's on the forefront. And I can tell you that over the last year, what we've seen as a result of the pandemic is younger women and just the younger generation in general being more aware about finances. And, I'm sure their families have been talking about it. Families have been affected with the economy. So people are talking about it. It's more at the forefront of their mind. They're thinking about, oh, maybe I should start, putting money away. And that's what we've seen, people coming to us, opening accounts. We've seen some that maybe started on a platform like a Robinhood, where they thought, they were interested, they wanted to dabble and do it themselves. But they realized, oh, I might need some professional to help me kind of, get a strategy going and a game plan instead of just, grabbing at a couple of different stocks or Bitcoin type thing. But yeah, we've definitely seen younger people looking to get a game plan going, get some sort of investments going, that in the future can really be a real nice nest egg.
That's really encouraging to hear. And Jamie, let's wrap with careers for women in advisory. How does one get into the business? What's the best advice you have or resources that you can offer?
Yeah, so I think, if you're a college age woman and you have any interest in finance, find a good internship. There's so many out there. You can do it as a paid internship or for credit. But that's a real good way to kind of get your foot in the door. Check it out, see if it's something that you like, because it's a tough industry. As you know, it's volatile. You got to ride the wave along with clients and the different emotions that come with that. You got to have a thick skin. So test it out with an internship, see if it's something that you like. When I was right out of college, I got a job working at a major wirehouse. And, while I was in test taking mode, I thought, oh, I'll get my Series 7 and get things going. And I worked on some different teams. I saw how different advisors worked, what I liked about it and what I didn't. So definitely, kind of test the waters, make sure, do you like working with clients as an interface, or are you somebody who wants to be behind the scenes? Maybe you're interested in going an analyst route or something like that. I could tell you, I never thought coming out of college that I would end up owning my own advisory practice. So I'm really proud about that. And, but it definitely, was testing the waters along the way and seeing, what you like, what you don't like, and then pulling the best of yourself out.
All right, Jamie, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.